in store for us, and that's going to be Oliver Slope. He's with Blue Line Futures in Chicago. Oliver, thanks for being on. All right, brother, what's top of mind to you today?
Well, we had a little bit stronger open on the Sunday night trade, but started giving that up early this morning and starting to see the sellers kind of step back in here over the last half an hour. I still think that, we could see this corn market continue to work higher as we kind of approach significant support that I think we need to hold 430, 432. That was old resistance just a couple weeks ago. That's now going to be support or break and close below that, and potentially the funds to step back in. I think, over the last couple of years, a lot of people have been rewarded for waiting, and the market's been very forgiving. And I think this is a year where you got to be a little bit more proactive on some of these market movements. So I think if we do get more of a springtime push higher, I think people are going to want to take advantage of that. I'm a little bit more skeptical on the bean market in particular. We've got an election at the end of the year, and there's been some jawboning back and forth with regard to tariffs, and that makes me a little bit nervous. And I think funds are probably pricing in that concern a little bit as well, as they've established a very large net short position.
Yeah, it looks as though they probably took a little bit of that off in corn. Did you see that last week?
Yeah, a little bit off of that. We've got a big report at the end of the month, and things always change, and things change very quickly in the markets. You know that as well as anybody. So things can turn and become more favorable, but as it stands right now, I think, we do get these rallies. I think producers are going to want to try to capitalize that as much as possible, and options are a great tool to do that. If you're worried about, missing out on the upside, you can at least establish a floor and keep that upside open.
Great stuff. All right, stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Oliver Slope. He's with Blue Line Futures in Chicago. We'll be right back after this. Mr. Oliver Slope, he's with Blue Line Futures in Chicago. Oliver, thanks for sticking around. Anything jump out of you there when I talk about those livestock prices?
Well, we got a nice little bump in cash cattle trade late last week, and I think that could be spilling into some strength here to start this week's trade. All in all, though, the live cattle market's been very range-bound, particularly if you look out to the June contract, which overtook April. In terms of trade volume late last week, we've just been sideways for the better part of the last 2 months, and I wouldn't be surprised to see that continue. Now, we do have a USDA report, cattle on feed report, at the end of the week, and I know how much you love waiting on another report to come around.
Yeah.
But I don't know that there's going to be a whole lot of new news there, so I think we continue to be range-bound. I think what I'm more concerned about and focused on is some of these outside markets. We got a big Fed meeting this week. We've got energy prices climbing higher. We've got RBOB gasoline making new highs for the year, and that's a big player in terms of inflation. So it'll be interesting to see what the Fed comes out and says. Obviously, I don't think there's a lot of expectations that they're going to do anything this month, but it's about what they say and what they project for going forward that could have implications on some of these markets.
Great stuff. I agree with you. Thank you very much for taking the time today, Oliver Slope. He's with Blue Line Futures in Chicago. We'll bring it back here to